What's up, guys? JD here, back with another video, and today I want to kind of go over the week, Monday, November 27th to Friday, December 1st, all of our trades, all of our plans, all of our execution, I guess, of the trades. So yeah, let me just get right into it. So Monday, I was kind of looking out for some buying continuation. So first trade I took this small scalp. This was a small warm-up position. Just basically bounce off this key level. I took my profits by this key level right here, and it's just pretty self-explanatory. Thereafter, I waited for another pullback. I saw this was controlled selling in the magenta, and it tapered into the blue. I was already looking out for this taper, so look at this beautiful structure that we formed in the taper. So I actually took the long right here on this break of this blue algo. So bang, take the profits right there. Leave some runners if you want to. So I took the profits, and then I actually re-entered my position on this second push up right here. I believe the second candle, because I thought it was going to break out, and I got stopped out. However, you can see this stop, right? I got stopped out right before this. This was, I guess, the head that I was looking at, and this basically equaled out to the profits I made in this trade. Maybe I was a little bit green actually. And either way, I had this trade that I was green on. So I use a stop loss from this trade as a stop loss here. So the profits from this trade as a stop loss here. And that's kind of what you can do to kind of hedge your risk. You want to be trading with your profits and trying to make more off of your profits. But it helps when you're early in the day and you're green. So thereafter, we just waited for that controlled selling, tapered into the blue. Boom, we get a little breakout. I entered on this pullback right here. So I knew it was going to bounce, pull back, and we got that beautiful pullback. We let the trade come to us, and boom, you take your profits right there. Hold out the runners. If you want to re-enter here, there is structure to do so actually. So there's that cup, that handle, and you can re-enter there. In this case, I didn't re-enter. I just left runners, so took some runners out there. And thereafter, we had some tapering. So we were in this green and we went to this red. So I was already looking out for tapering. There was another tapering algo here that I didn't chart out because my chart would have been a mess. But we tapered after into this blue algo. So once we tapered into this blue algo, there was some weakness. And I was looking out for them to complete this cup right here at the red level. So I started my puts up here with the earlier profits from this trade as a stop loss. And I started a small short position here. I took some profits by this candle, waited for some green candles, and I reopened my puts actually right here at this structure when this structure broke. So it was an inverse cup. Then the handle formed. This was a super weak candle and it rejected. So I took more puts right here, take the profits by here, and then another rejection right here. And yeah, so I re-entered right here. And I took all of the profits by this bottom and by here. So, you just have to plan out your trades accordingly. Wait for the structure. So I was already pre-planning this cup to be formed. So that's why I had the confidence to get into puts here. And I had a stop loss from earlier profits, which I would have still had a green day even if I got stopped out of this trade. So you use the profits to add on to your profits, right? So this was probably one of my best days that I ever had, Tuesday. It was just beautiful, beautiful, beautiful structure. So I was looking out for buying continuation because we had this controlled selling and it was tapering. So my plan was to look out for buying continuation. So small scalp right here after I saw this controlled algorithm building liquidity. Then we got that microstructure. So I entered right here on this red candle and boom, instant push up, take my profits. Bang, that was a small scalp position that I usually like to do in the mornings. So I took my profits. Then after I took some puts right here because this cup had completed right here. So I was expecting a handle. I took my puts, but I know that this is a bullish structure, so I cannot hold out puts. So I took profits right where it demanded. I left 2 put runners because I wanted to be hedged for my calls. So there was news coming out, I believe at this time. And so I wanted to be hedged with puts and calls in case we rejected the range, or if we got bought up, I would be in calls. So as soon as I saw this green candle push, I got in my calls. Boom, took profits by there. Not a huge position, maybe half the size, but it was protected by this stop loss. So boom, I got in, right? I was in profit. I was happy. I didn't maximize the trade, but you don't have to. You just got to take your profits. Why did I take profits by here? Because this level right here, I figured that we would have some sort of rejection back into here, and I can re-enter here, which we didn't. So we just pushed straight up, missed out on some profits, but I don't care because there's always a pullback. So again, magenta, tapered into the blue. Beautiful entry point right here at this red candle. That's where I put my entry. Stop loss at the fib that we did not retest, which shows me it's a strong support. If we just got bought up straight into the fib, we pulled back, we didn't even touch it, that has to be a strong support. So I had the confidence to get into heavy calls here. Took a full position, took profit by the top of this cup. This cup was weak, it did not complete, but we had the liquidity building. So once I saw this liquidity building, this more tapering, and the green algo couldn't really get us under, I took more calls right here on this red candle, and boom, instantly pushed up with earlier profits. So it's all about, managing your risk. Right here, I was amazingly in profit. I could have finished the day, didn't have to look at the chart anymore. And it's all the same trade. It's just boom, take your profit. You re-enter here with more contracts because you have more affirmation. And then here you take less contracts because you're looking for the breakout, but you don't want to be in risk since you already made your money, right? So I took my profits by high of day. Beautiful trades right here. I was happy, so I kind of just let the chart go. This is casual selling off, but once we tapered from this blue to this pink, I figured that we were going to try to complete some sort of cup. Again, same thing as the day before, but I had it planned out. So once I saw this rejection, I took my puts, I think around these candles, maybe this green candle, and no, I'm sorry, my mistake. So I saw this tapering green and the red, and once we rejected that red, this is where I took the puts at this key level, and boom, beautiful, 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 right to where the cup had to complete. So take your profits there. I did not leave any runners because I figured that I would have another chance to reopen, which we did. And so I took more puts here after I saw this. This was a lot of liquidity building, and again, it was tapering. So I took more puts here at this top, small size because it was already power hour into the day, and took the profits. But this was probably one of my best days ever. Just beautiful structure, just overall good trades, right? Good trading. That's what we want. So we gapped up 4 points, 3 points, some crazy thing like that. So in the morning, I was looking out for selling continuation because I figured we had to close this gap in case we wanted to keep going up. So I was looking out for selling continuation. Now, there was beautiful structure here, beautiful sell-off. I could have taken puts here, but I didn't because I didn't know the sentiment of the market. So I didn't want to place my trades too early this day. This was like kind of, it was kind of weird because it was a nice gap up. So I let it sell off a little bit. And once I saw this liquidity build and we rejected this beautiful red level with this beautiful head and shoulder, took my puts right here out this micro structure. Boom. Right down to where we wanted, stress-free. If I got stopped out, so be it. Doesn't matter. No need to take unnecessary risks to try to catch the whole move. You just wait out for your play to come out to you. And, that's at the end of the day how you stay consistent, not rushing into trades, not planning ahead. Thereafter, we had a nice little rejection here. This was a lot of liquidity building, and it was a bearish algos. So this green algo tapered into the red algo, right? Bearish algos. And so I saw this rejection. Once I saw this green candle and this red candle engulfing, I took puts right when it was like engulfing it right here at this level. And I took profits right here. So it was a quick little scalp, good RR. I like to trade. I like to take quick little trades like this because it's a nice like scalping opportunity. Not with huge size, but it's a fun trade to take. Small size, of course. Thereafter, I took some calls here because we were having some support here, a lot of wicking around. And I figured this is bearish, right? If this was bearish liquidity and we didn't take it, like instantly, I figured buyers would be defending this a little bit. So I took some calls here, took my profits by because they didn't complete this cup. So I took my profits here after this green candle. And you know, it is what it is. Sometimes it doesn't give you that nice of a move. But I was still aware of bearish algos, Didn't take the puts here. This was nice structure, but at my fibs, but it is what it is, right? But I figured microstructure, which we got it. And right here I entered, took these puts. And so I took like 20 contracts here on this microstructure because I knew it was a nice flush down and it's beautiful structure on a nice fib. So boom, take your profits. And then after I waited for some green candles and I re-entered half the position for my runners. And boom, we just got a beautiful flush down and it just worked out. It worked out well for us, right? The whole time stress-free, again, not worrying about my trade. Where's the trade going? I don't care. If it happens, it happens. If I get stopped out, I still made money that day. So, you know, it's just about being stress-free. So we had this crazy chop here. I didn't trade this morning. I didn't like it. Here I tried to go long because I saw nice liquidity ahead. And I figured it would try to break out with all this liquidity here. But I got stopped out. You know, not every trade goes accordingly. But I got stopped out. I didn't get mad. I didn't get frustrated. It is what it is. It's the cost of trading. So I didn't take any trades. I was just kind of waiting, being patient. Once I saw this, this shoulder, and then a head right here. So I took my puts right here once this candle was pushing and took it down to here. Now, I should have opened the trade here, but I was kind of like trying not to risk it too much or get into the trade too early. So just when there was actually momentum, I actually entered the trade. So on this, like probably halfway through this candle, I entered and it had momentum. And it was a small trade, but it worked out. And it kind of broke even what I lost earlier. So I had confidence to keep trading since I wasn't like at a terrible loss. And we were consolidating here for a long time. Head, shoulder, didn't break out. But then we see this consolidation and another head and a shoulder. So they finally broke out. So I took my calls here, took my profits by where I had to, which was this previous level, because here I figured we would have a handle, which we did. We had the tapering algos. I did not re-enter my position here. I was actually looking out for a deeper controlled selling once we got up to the top. So I got puts at this top, took my profits, 20 contracts here, took my profits on the full 20, waited for green candles, re-entered, and then took 10 contracts, took profits, okay? So secure the main trade, leave your runners, re-enter the runners on good candles for you. Thereafter, I took some lottery calls because we had completed this cup, this beautiful handle. So around here at the bottom, I took some lottery calls and boom, it exploded. I wasn't even looking, but I was doing my business, my wrap business, and I just look at my pocket and wow, up 300%, 400%, crazy. So I started taking profit and it was a good trading day. This week was actually really, really, really good for me. Like probably my best week ever. But I just got to keep the momentum going, right? So, yeah, I got into this huge trade. 2 points. No, I mean, it's not that great, but whatever. It was a nice trade. So that morning, I figured that we would have some sort of pullback. Actually, I bought some puts at this top. 1 DTE, more lottos. I don't know. I was over trading. I guess I was happy because I made a lot of money. So I bought some 1 DTE puts when we were overbought. That's why the stop loss is here like this, so weird. And it actually worked out because we gapped down a little bit. It wasn't that crazy in profit, but I did take like a 20% trade there. Which is still nice. It's still nice to like have a nice little swing trade. But yeah, we took more puts here. After like this rejection was here, took my profits as structure demanded, but I knew that these were bullish algos, controlled selling, tapering into the blue. So I was looking to go long. Cup completed, beautiful handle. So I entered in calls right here off of this magenta. beautiful structure, head, shoulder. Took my profits here. Looked for a pullback, re-entered. I took shorts here, so quick short scalp. Usually I'll do that down to the fib level, and then I'll re-enter after this fib level, gain support. So here I got in calls again, scalped in, got out, waited for the control doggles to appear again. I didn't get in this. I just waited for another jump, another little pullback, and then I got on this one. So it's all about entering and getting out of your position, taking your profits. So this was Powell's day. So I kind of got in and out of my calls often, and I was hedged by some puts. So these puts, I took profits on some of them, but I left like a couple of them open just in case. And my calls, I kept taking profits, reopening at a better price, taking profits, reopening at a better price, taking profits, you know. So it's all about managing your risk. So as long as you're just making profit throughout the day and it works out, right? So I was already green to this day before Powell even spoke. And I took some lottery calls and some lottery put. I had my lottery puts. So my lottery puts were like pretty much destroyed, so I didn't add to those, but I took some lotto calls and they were up a little bit. My puts took it, like my puts got smashed, but I didn't care because all of these profits, they made up for the puts, and I had lottery calls. So Friday was about the only day I ended up break even. So it wasn't a red day, it was just a break even day. Which I'm okay with that because it was a good week. And sure, I could have had nice profits on Friday too, which would have been nice, but whatever. I tried to get the ticket, it didn't work out, but at least we didn't turn it into a red day. So it's all about managing your risk, you know. You just have to learn how to do what works out for you. Putting these stop loss and take profit indicators, like they really help with my trading. It's really nice. So another question I got, how do you identify the algorithms? So how do you do it? Okay, so during the day it's going to be playing, right? And you're going to have a jump up and you're going to have a wick pullback. So usually off of those wicks you can kind of tell the algorithms. So you'll familiarize yourself with the algorithms as you keep plotting them out. But look, you see how this wick, 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 they all line up. So that all of those wicks are in correlation with that algorithm, right? And now they can be at different sizes. So they can be a little bit fatter or they can be a little bit thinner. Usually there's algorithms that'll build liquidity. So this, look, this magenta right here, it's grabbing sellers to get sellers in the market. Basically, they're gonna think that this is a sell-off, right? This blue right here is buyers holding the price up at a certain price, so keeping their positions. So once you see that purple get back into that blue, you know buyers are gonna take it up into this yellow. So you'll see, look, you see this big blue algorithm building liquidity, right? So building liquidity in this blue algorithm, right? And once we can make that yellow algorithm appear, which is a buying algorithm, it's going to be the same size as the blue, right? And you're going to get a microstructure outside, right? Which is a micro buying channel outside, based on if we can build liquidity with the same micro structure, right? So some of the safest trades to take is when you get these micro algos building liquidity and they activate this micro buying algo, because you're going to be sure that the buyers are going to hold that. And as long as you get a good entry on a red candle, you're going to make sure that your trade is always green. So, you know, identify your risk, trade good, get in the trader mindset. A really good book that I've been reading, Trading in the Zone by Mark Douglas. Really recommend reading that if you're actually trying to take things seriously. Keep practicing, don't give up. You only lose when you give up. So those are kind of just the recommendations. And, you know, those are some of the trades I took this week. Really good week. Hoping next week I can keep it up. I'm not going to trade that much. This week I kind of overtraded. Realistically, I did. I took a little bit more trades than I wanted to, but they worked out. So I want to carry the confidence over, but I don't want to take as many trades as this week. So yeah, next week I'm gonna try to take less trades, more quality trades. But my entries, that's what I've been trying to practice this week, so I did that. But thank you guys for watching the video. Anyways, if you guys stuck out to the end, you guys are soldiers. You guys deserve a lot of stuff. Because this is a skill that's worth learning for the rest of your life. Print money anywhere you want. Learn how to print money wherever you want, however you want. And it's just, it's a trading is a skill of the elites. So only the best of the best can do it. If you don't want to be the best of the best, then you can't do it. Everyone's trying to take money from each other in trading. Realistically, that's what it is. So get better and keep staying consistent, keep grinding, and eventually we're all gonna get Ferraris and Lambos out of the market. So hope you guys had a good weekend. Rest up. Let's smash next week, and I'll see you guys in the next video.